You already know you should be managing your risk. You've heard it 100 times. Risk only 1% per trade. Use stop losses. Don't over-leverage. The rules are simple. You could recite them in your sleep. And yet, if you're honest with yourself, you're not following them. Not really. Not consistently. Maybe you follow them when you're scared, right after a big loss. Maybe you follow them when you're being cautious, at the start of the week, when your mind is fresh. But then, something shifts. A setup looks too good to pass up. The market is moving, and you don't want to miss it. You've had 3 losses in a row, and you need to make it back. And suddenly, those risk management rules you know so well become suggestions. Flexible guidelines, things you'll get back to later, after this one trade. And here's what I need you to understand. Risk management isn't failing you. You're failing to understand what risk management actually is. Most traders think risk management is about position sizing and stop losses. And yes, those are tools of risk management. But risk management, at its core, is about something much deeper. It's about protecting your ability to stay in the game long enough to become good at it. It's about protecting your psychology from the devastating spiral that happens when you lose more than you can emotionally handle. It's about creating a container strong enough to hold all of your mistakes, all of your learning, all of your evolution as a trader, without blowing up your account or your mind in the process. Risk management isn't just a rule you follow, it's the foundation that everything else is built on. And without it, nothing else matters. Not your strategy, not your analysis, not your discipline. Because without proper risk management, you're one bad trade away from destroying months or years of progress. Let me tell you what really happens when you ignore risk management. It's not just that you lose money you can make back. What you lose is something far more valuable. You lose your emotional stability. You lose your confidence. You lose your ability to think clearly. Because when you risk too much on a single trade, you're not just putting your capital at risk. You're putting your entire psychological state at risk. And once that breaks, once you experience the panic and the desperation and the self-hatred that comes from watching a position that's too large move against you, something changes inside you. You can't unsee it. You can't unfeel it. And that wound, that psychological damage, it takes far longer to heal than your account balance does. Think about the last time you risked more than you should have. Maybe you doubled your usual position size because you were so sure about the trade. Maybe you didn't use a stop loss because you told yourself you'd watch it closely. Maybe you were trying to recover from earlier losses, and you convinced yourself this was a calculated decision. Whatever the reason, what happened next? Even if the trade eventually worked out, what did it feel like while it was open? Did you feel calm? Did you feel in control? Or did you feel that knot in your stomach, that heaviness in your chest, that compulsive need to keep checking the price every few minutes? That's what trading without proper risk management does to you. It turns you into a hostage of your own position. It robs you of your clarity. It makes you reactive instead of responsive. And even if you win that trade, you've lost something more important. You've reinforced a pattern that will eventually destroy you. Here's the hard truth. Every trader who has blown up an account, and I mean every single one, broke their risk management rules before they blew up. It's never the market that destroys you. It's never a surprise event that you couldn't have anticipated. It's always the same story. They started taking bigger risks. They started moving stop losses. They started convincing themselves that this trade was different, that this time they could break the rules because they had a good reason. And maybe they got away with it once, maybe twice. Maybe they even made good money doing it. But eventually, inevitably, the market did what the market does. And because they were risking too much, because they had abandoned the one thing that could have protected them, they were wiped out. And here's what makes this so painful. They knew better. You know better. No trader blows up because they don't understand risk management. They blow up because they choose to ignore it. And that choice, that moment when you decide to risk more than your rules allow, That's not a trading decision. That's a psychological event. Something inside you is driving that decision. And until you understand what that something is, you're going to keep making the same choice over and over again, each time telling yourself it'll be different. Each time promising yourself you'll go back to proper risk management after this one trade. So, what is that something? What is it inside you that makes you abandon the very rules you know are meant to protect you? For most traders, it comes down to one of a few core wounds, and I use that word intentionally. These aren't just bad habits. These are psychological patterns born from deeper needs that aren't being met. For some, it's the need to prove themselves. Trading becomes about showing someone, maybe a parent, maybe a partner, maybe just yourself, that you're capable of something significant. And small, consistent gains aren't significant enough. They don't prove anything. So you take bigger risks because you need bigger wins. You need evidence that you're special, that you're different, that you have what it takes. And risk management, with its boring consistency and its small, steady gains, doesn't feed that need. So you abandon it. For others, it's about control. Maybe you grew up in an environment where you had very little control over what happened to you. And now, in trading, you've found something where you feel like you should be able to control the outcome. But the market doesn't care about your need for control. It does what it does. And when you experience losses, especially unexpected ones, it triggers that old feeling of powerlessness. So what do? You take bigger risks. You increase your position size. You try to force the market to give you what you need. And risk management feels like giving up control, like accepting that you can't determine the outcome of any single trade. So you ignore it because following it means facing the uncomfortable truth that you're not in control of the market. You're only in control of yourself. Then there's the wound of scarcity. Maybe you've struggled financially for most of your life. Maybe you've watched opportunities pass you by because you didn't have the resources to take advantage of them. And now you see trading as your way out. Your chance to finally have enough. But that desperation, that need to make it happen fast, it makes risk management feel like an obstacle. 1% per trade feels like it'll take forever. You look at your account size and you calculate how long it would take to reach your goals. Trading that way, and it feels hopeless. So you convince yourself you need to take bigger risks to get there faster. You tell yourself that once you build up your account, then you'll trade properly. But that day never comes. Because the habits you build on the way up are the same habits that take you back down. And here's what all of these patterns have in common. They're using trading to meet needs that trading was never designed to meet. Trading can't prove your worth. Trading can't give you control over uncertainty. Trading can't solve scarcity that exists in your mindset. And when you try to make trading do those things, when you use it as a vehicle for healing wounds that need to be healed in other ways, you end up sabotaging the one thing that could actually work. You abandon risk management because risk management requires you to accept limitations. It requires you to trade in a way that's sustainable rather than spectacular. It requires you to let go of the fantasy that you're going to make it all happen in one trade, 1 week, 1 month. And for most traders, accepting those limitations feels like giving up on their dreams. So they choose the exciting story over the effective strategy. And they pay for it. Over and over again. Now, let me tell you what changes when you truly embrace risk management. Not just follow the rules, but actually internalize why those rules exist and what they're protecting. First, your relationship with individual trades completely transforms when you're risking an amount that you can genuinely afford to lose without emotional distress. A single trade stops having so much power over you. It becomes what it actually is, which is one data point in a long series of data points. One execution of your process. One instance of your edge, playing out or not playing out. You can take the trade, you can let it develop, and you can close it according to your plan without your entire emotional state being dependent on the outcome. That freedom, that spaciousness, that's what proper risk management gives you. It gives you back your clarity. Second, you start to see consistency differently. Most traders are chasing big wins. They want the trade that doubles their account. They want the story they can tell. But when you're managing risk properly, you stop chasing those big wins because you realize they're not necessary. You realize that small, consistent gains compound into something significant over time. You start to appreciate the beauty of boring success. And that shift in perspective, that changes everything. Because now you're not trading to prove something or to feel something. You're trading to execute a process that you know works over time. And that removes so much of the emotional turbulence that makes trading difficult. Third, and this might be the most important one, you begin to trust yourself. Because every time you follow your risk management rules, especially when you don't want to, especially when it feels like you're leaving money on the table, you're making a deposit into your self-trust account. You're proving to yourself that you can do what you say you're going to do. You're demonstrating that you value your long-term survival more than your short-term desires. And that self-trust, that's the foundation of everything. That's what allows you to stay calm in drawdowns. That's what allows you to keep executing when your strategy isn't performing. That's what allows you to be patient when waiting for setups. Because you trust that you're not going to sabotage yourself. You trust that you're going to follow the plan. And that trust is earned through consistent action, through choosing risk management over impulse, day after day after day. But here's where most traders get stuck. They understand all of this intellectually. They agree with it. They know they should be managing risk properly. And yet they still don't do it. Because knowing something and embodying something are completely different. Knowing that you should risk 1% per trade doesn't help you in the moment when you're looking at a setup that looks perfect and you're convinced that risking 3% is justified. This one time, in that moment, knowledge doesn't protect you. Only practice protects you. Only the habit of pausing, of checking in with yourself, of asking what's actually driving this decision, only that protects you. So the work isn't about learning more about risk management. The work is about catching yourself in those moments when you're about to break your rules and getting curious about what's happening. What need am I trying to meet right now? Am I trying to prove something? Am I trying to recover from something? Am I trying to feel something? And just that pause, just that moment of self-awareness, that's often enough to shift your behavior. Because once you see what's actually driving the impulse to take excessive risk, once you bring it into conscious awareness, it loses some of its power over you. And over time, as you practice this, as you keep choosing proper risk management even when it feels limiting, something begins to shift. The voice that tells you to take bigger risks gets quieter. The impulse to break your rules becomes less compelling. Not because you've become more disciplined in some forced, white-knuckle way, but because you've genuinely changed your relationship with trading. You've stopped using it to meet needs it can't meet. You've stopped trying to make it into something it's not. You've accepted it for what it actually is, which is a long-term game where survival is the first priority and profit is the byproduct of consistent execution. Let me tell you what risk management actually gives you that most traders don't realize. It gives you time. Time to learn, time to make mistakes, time to refine your process, time to develop the psychological resilience that profitable trading requires. Without proper risk management, you don't get that time. You run out of capital before you run out of lessons to learn. You blow up before you figure out what you need to figure out. But when you're managing risk properly, when you're only risking amounts that allow you to take hundreds or thousands of trades before you run out of capital, you give yourself the gift of time. And time, in trading, is everything. Because you don't become a profitable trader by avoiding mistakes. You become a profitable trader by surviving your mistakes long enough to learn from them. This is why risk management is your real weapon. Not because it helps you make more money, not directly, anyway, but because it keeps you in the game. It protects your capital. It protects your psychology. It protects your ability to continue learning and growing and evolving as a trader. It gives you the foundation to build everything else on. And without it, everything else collapses. Your strategy doesn't matter if you're risking too much. Your analysis doesn't matter if one loss can devastate you psychologically. Your discipline doesn't matter if you're already too damaged emotionally to execute properly. Think about it this way. Every professional in every field has constraints they operate within. A surgeon has protocols they must follow. A pilot has checklists they must complete. An engineer has safety margins they must respect. These aren't limitations that make them less capable. These are the structures that allow them to be consistently excellent. And risk management in trading is the same thing. It's not a limitation. It's the structure that allows for consistent excellence. It's the container that holds your trading practice together even when everything else is falling apart. And here is what's beautiful about this. Once you truly internalize this, once risk management becomes non-negotiable for you, trading gets easier. Not easy, but easier, because you've eliminated the biggest source of psychological stress, which is the fear of catastrophic loss. When you know, truly know, that no single trade can destroy you, that you can take 10 losses in a row and still be fine, that changes how you show up to the market. You're no longer trading from a place of fear. You're no longer trying to protect yourself from ruin. You're simply executing your process one trade at a time, knowing that each trade is just one small piece of a much larger picture. So, where does this leave you? Right here, right now, with a choice. You can keep trading the way you've been trading, hoping that somehow it'll work out differently this time. Or you can make risk management non-negotiable, not because someone told you to, not because it's a rule, but because you understand that it's the foundation everything else is built on. You understand that it protects not just your capital but your psychological ability to continue doing this work. You understand that it's not a limitation, but a liberation, and you're ready to choose sustainability over spectacular failure. That choice, that shift from seeing risk management as a constraint to seeing it as a weapon, as the very thing that allows you to stay in this game long enough to become good at it. That's the shift that separates traders who make it from traders who don't. Because the ones who make it aren't smarter. They aren't more talented. They don't have better strategies. They just understood earlier than everyone else that survival comes first. Fault text. That protecting their ability to trade tomorrow is more important than maximizing their profit today. That boring consistency beats exciting inconsistency every single time. This is the shift you need to make. Not tomorrow, not after this next trade, right now. This moment, this decision to never again risk more than you can afford to lose without emotional distress. This commitment to making risk management the non-negotiable foundation of everything you do in the markets, because everything else, your strategy, your analysis, your execution, all of it is built on this foundation. And if the foundation is weak, if the foundation is constantly being compromised by your need to prove something, or control something, or escape something, then nothing you build on top of it will stand. But if the foundation is solid, if risk management is truly your weapon, protecting you from yourself and from the market, then you have a real chance. Then you can learn, then you can grow. Then you can become the trader you're capable of becoming. I know this isn't what you wanted to hear. You probably wanted advanced techniques or secret strategies. But the truth is, none of that matters if you're not managing risk properly. None of that will save you from yourself. Risk management is the foundation. Everything else is just decoration. And until you accept that, until you make it truly non-negotiable in your trading, you're going to keep struggling. Not because you don't know enough, but because you're building on sand instead of stone. The choice is yours. The market will be here tomorrow. The question is, will you? Take care of yourself. Protect your ability to stay in this game. Like, share, and subscribe, and I'll see you in the next one.